Okay, in this session, we are going to discuss question number 3 in the manufacturing account, right? So, in the question number 3, what they ask, requirement is prepare the manufacturing account, manufacturing trading account, right? Prepare the income statement also, income statement below, manufacturing statement there. Here I have prepared the balance sheet, the extract of balance sheet, not the balance sheet, right? And here T accounts are there. If you don't have anything, if I want to explain you in T accounts, I will show you here, right? Current assets. Okay. So we will go for the additional information. What are the additional information they have given? Additional information, they says no additional non-current assets were purchased during the year. Factory machinery is to be depreciated at 15% annum of cost, right? A Modi manufacturing company was formed on 1st of August, right? 1st of August only they are starting, right? 1st of August. For the year ended 30th, 31st July, right? This is 31st July, not December, 31st July, right? Balance sheet, and this is also 31st July. Asset 31st July, right? 31st of July. 31st of July 2024, right? And we can take down the value right here. Cost of machinery 102,000. Then it will be easy for us to do our calculation, right? Cost of machinery, rather than opening the T accounts, right? 102,000. Cost of machinery 102,000, right? Furniture and fitting, office furniture and fittings 56,000, right? Office furniture and fittings 56,000, right? Cost of tools, cost of loose tools is 4,400. 4,400, right? If you go there and put the T accounts for these things, now you know how to prepare the T accounts. So if you spend your time in opening on the T accounts for these simple accounts, it will be a time consuming, right? Here you can say depreciation, and this is the cost, right? So down what they have, what they are telling, the factory machinery is to be depreciated at 15% per annum on cost. 15% per annum on cost, factory machinery. So see, the cost is 102,000 into 15%, that is 15,300 is the depreciation. 15,300 depreciation, it will go to the accumulated depreciation. Depreciation on what we call machinery comes to 15,300 in the what you call manufacturing income. It will go to the manufacturing income. Why? Machinery is used for the production. Because of that, we are taking the depreciation for machinery to the manufacturing account under the factory overheads. Under the factory overheads, right? So that is okay. It will go expenses, and here we are showing provision 15,300 has to be deducted from the machinery here, right? So I am showing the double entry, not a single entry. Then it will be easy for you, right? And second, the office fixture and fittings are to be depreciated 12.5% at cost, right? 56,000. It is 56,000. See how much it will be. 56,000 56,000 into how much? 12.5. It is 7,000 per annum. 7,000 per annum. This will charge to the, but if we will charge the profit and loss account, right? 7,000. Furniture and fitting depreciation 7,000, right? So double entries here we are recorded as expenses, here we are recorded as a what you call the accumulated depreciation. Finished, right? And the loose tools are to be revalued at the end of each financial year. The loose tools are revalued at the end of the each financial year. Opening value we know, closing value we don't know. We keep it as it is, right? When we are closing the accounts we can understand. The rates and insurance are to be apportioned 3/4 and 1/4. Factory, and here they will say office and factory, right? So here rates and insurance, insurance, okay. Factory 3/4 to the factory, 1/4 to the office, right? Those are the adjustments are there. So we will go for the we'll start taking the balances to relevant accounts, right? Then when we are coming to the rates and taxes, we know rates. Here we will say rates and insurance, right? Insurance, right? In the what you called that's all, rates and insurance, right? Okay, so that is finished. Now we will see rates, how much they have mentioned. Rates and insurance 5,000. Rates and insurance is 5,000. 5,000 5,000 divided by 4, 1,250 for office and 3,750 for factory, right? Factory. So we keep this as it is, right? When they ask for that, when we come to that, we can apportionment, then we can see the apportion the cost, okay. Then we go for the what you call the balances, what they have given. On 1st of August 2024, cost of machinery 102,000 we had taken. Cost of furniture and fitting 56,000 we had taken. Tools we have taken 4,400. For the year ended 31st July 2014, following are given. Revenue 400,000, 400. 400,000, 400,000 and 400 revenue, okay. And purchases, raw materials, right? Raw materials, how much? Raw materials 99,500. Purchases 99,000, sorry, 99,500, right? Purchases, right? Finished goods they have purchased 19,300. Finished goods coming to the trading account, right? Trading account, finished goods purchase 19,000, how much? 19,300, 300, okay. Then finished goods, right? And purchases return raw material 1100. Purchase return raw material 1100. Then you have to deduct it. Purchases returns, right? And salaries and wages for factory operatives 94,200. 94,200 for labors, right? Wages, right? 94,200. And factory supervisors 41,050. 41,050 for factory supervisors, right? And office staff 33,100. 33,100 that goes to trading, profit and loss account under administration, right? Sales staff that will go to the wages for sales staff. Under the selling and distribution, how much? 18,900. 18,900. Okay, 18,900. Then general expenses, factory 19,400. General expenses 19,400. Factory under the overheads, right? And general expenses for office 17,513. 17,530. That is general expense, right? General expenses. And rates and insurance. That is the one given here. For the factory, rates and insurance, that 3,750, and that will go to the factory overheads, because they said rates and insurance should be apportioned according to the fractions given. That is for the factory 3/4 and 1/4 for the office. The 3/4 of 5,000 is 3,750. 1/4 of the 5,000 is 1,250. That's 1,250 office will go to the profit and loss account. 1,250. 3,750 go to the manufacturing account under the factory overheads, right? So that finished, and we are going to they are giving as at 31st July 24 factory inventory raw materials 8,600. Raw material 8,600, right? Raw materials we had to take to the 8,600 raw materials, right? Balance sheet we had to take under the closing stocks 8,600, and it will go to the manufacturing account for the 8,600 as a closing stock raw material. Okay, and work in progress 8,200. In the balance sheet 8,200 you had to say under the mention under the current assets, and in the manufacturing account closing work in progress you had to mention as 8,200. That has to be deducted, right? And finished goods 21,100. Finished goods 21,100 you had to mention under the current assets, and other should go to the trading account 21,100. 21,100, right? And rates and insurance prepaid 400. This is now rates and insurance prepaid 400 that we haven't seen. So here we have to make another adjustment, right? Another adjustment. Why? We are giving in the additional information only they have to give, but they have given in the normal information as a normal prepaid, right? Prepaid portion, prepaid, paid how much? Prepaid 400, right? Then the amount to be charged is 4600, right? 4600, 4600 divided by 4, 1150. This will 1150 into 3, 3450. Actually we have to charge 3450, right? Here 3450 we have to charge, and in the administration expenses 1150 we have to charge, not 250, because it is prepaid amount. This amount is prepaid. This amount is prepaid, right? Prepaid. So we have to show it under the current assets, right? Current asset 400 you have to show prepaid expense, rates and tax, rates and insurance, rates and insurance, right? Rates and insurance 400. General expenses prepaid 280. General expenses, how much we have mentioned? General expenses, right? General expenses, they say general expenses office, factory and office, they said like that. Here they says general expenses for office expenses prepaid 280. Prepaid 280 you had to deduct 280. General expenses, general prepaid expense, general uh, rural, expense 280, right? 280 you have to show under the current assets. You have to deduct it, right? 17,530 minus 280, right? Minus 280. Then you will arrive minus 280, means 17,250, right? 17,250 general expenses, because general expenses we have for two places where manufacturing expenses also we are charging general expenses, and for the administration or section also we are charging the expenses, general expenses. So in the administration section general expenses only prepaid, right? You have to be careful, right? So the administration expenses only we have adjusted, right? And wages of factory operatives accrued 3100. Factory expenses, right? Wages for factory operatives, right? So we have mentioned here as labor wages, right? 94,000, that is 94,200 plus how much that accrued, added accrued expenses 3,100. 3,100 you have to add this 3,100, then you will arrive 3,100 means 300 and 97,300. 97,300. So the accrued portion 3,100 have to show have to be you have to show that under the current liability. So you have to say labor wages, labor labor wages accrued. Accrued how much? 3,100. It's you have to show that under the current liabilities. Here we are charging to the manufacturing account, right? Another one, this is an value of tools, loose tools is 3,300. Value of loose tools is 3,300. So what is the difference? 1,100 is the difference. This difference you have to show, you have to deduct it under the provision, right? And show it under the factory overheads tools, loss on tools, 1,100. 1,100. Okay. So finished, halas. Then you have to go for the balance sheet. Right? Here balance sheet I am not going to balance it because it is not going to balance, because that is an extract. This balance sheet, it is an extract of balance sheet. This is, oh, of course you have to balance because they ask us to balance it, right? The requirement is that. So with that, that's what I didn't go through it the whole information. That's what I couldn't able to locate these adjustments, because normally they used to give these adjustments in the additional informations, right? Not the major information or trial balance. They have given in the major information. Normally I don't read the major information or trial balance, and additional informations only I used to read it. So this is good experience for us, right? Okay, so you anyhow we have adjusted and correct, right? Now here balance it. Here opening balance won't be there because we just started the business. 99,500 plus, no, not plus, yes, yeah, not plus, you had to deduct it, returns 1,100. And raw materials, how much? 8,600. 600. Then you will arrive at consumed, raw material consumed 89,800, right? From that, with that you have to add other expenses, which is the prime cost, right? With that, 97,300. 187,300 is the prime cost. You had to add this factory overheads. Factory overheads 3,450 plus 15,300 plus 41,050 plus 19,400 plus 1,100. Then this comes to 80,300, right? 80,300 plus 187,300. Then 267,600. From that you have to, work in progress, no, opening, right? You have to deduct 270 from 267,000, 8,200. Then the cost of goods completed is 259,400, right? 259,000 goods completed, 259,400, right? With that we have to add 19,300, that is purchases. Then we will arrive at 278,700, right? From that you have to deduct the closing stocks of 21,100, right? Then you will arrive at 257,600, right? This has to be deducted from the revenue. Revenue, how much? Revenue, this is minus 400,400, right? Then gross profit is 142,800 is the gross profit. Okay. Then go out for the expenses, administration expenses, 1,150 plus 7,000 plus 33,100 plus 17,250, then 58,000, sorry, 58,500, and this is 18,900. Then total is, this has to be deducted, right? This should come to the first column, right? This should come to the first column, this total should come to this column, and total cost has to come this column, right? So here we will say 58,000 we'll do that, right? Closing stocks 259,400, right? This is 19,300. Okay. And this is 200, and this is okay. This amount 1,150, this is 7,000, this is 33,100, this is 17,250, and this is 18,900. Okay, so we had to deduct these amounts, right? We have to raise this. Right here we say 58,500 and 18,900 as we mentioned here. Okay, so this one to raise it, right? Okay, and here total this nothing. Here total you used to give is 58,500 plus 18,900, that is 77,400. You have to deduct it from 142,800, right? From 142,800 you have to deduct it 77,400. Then you will arrive at a net operating profit of 65,400, right? Then you have to mention this in the balance sheet, 65,400 as a net profit. Okay, have you understood it clearly? Because here they have given accrued expenses for labor, they have given accrued expenses of 3,100, then we have to add with the TB balance 94,200 with the 3,100, then that is mentioned here 97,000. That is for the labor. So labor, we are mentioning that accrued expenses under the current liabilities 3,100, right? And accrued expenses, prepaid expenses, right? They have mentioned prepaid expenses of general administration, that is 280. If we have made prepaid, we have to deduct it, general expenses, right? Prepaid general expenses. So we have deducted 280 rupees from 17,530 paid, and the balance is 17,250, right? And thereafter they said rates and insurance, they have given 5,000. Out of 5,000, we that 5,000 includes prepaid amount of 4,400. We have removed that 400, and then we have deducted, then balance is 4,700. Then that 4,400 is apportioned between the factory and office, that is 3,450 for the rates and insurance and for the factory overheads, and 1,150 shown on the administration expense here. Understood, right? So you have to be careful when you are showing expenses, right? Hello. Okay. Lights are right. Okay. 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 Excuse. Sorry for disturbance. And what I said is, here we have said that rates and insurance, we have paid 5,000, but accrued is prepaid is 400. We have removed that, and we have charged it to the manufacturing accounts, right? You have to be careful when you are allocating the expenses or classifying the expenses, as well as the allocating the expenses to the accounts, right? For the manufacturing profit and loss account. If you get a clear idea, if you got a clear idea on that, it will be easy for you. Rest of activities are very easy for you, right? So with this, I am concluding my session. So I hope to meet you in next class. In next class, what we are going to discuss is the profit margin charged to the manufacturing section. The a manufacturing plant want to act on a profit basis, so they will add with the cost of goods some portion of profits, then transfer profits. We used to say that transfer, we will I will explain to you in next class, that is transfer profits or transfer price. So we will discuss that subject in next class. Okay. Thank you for watching. Hope to meet you in next class. Thank you.